A Money to Start a Business Guide. Chapter 1. Money for Business. Business Money articles at liveabout.com/business-finance-6504671. Lots of free articles. Money to Start a Business 1. The two basic types of financing are equity and debt. Equity means you get money from friends, investors, by selling stuff or go public. Quite often, you give up a part of your company for investment money. Debt means you get business loans. The lender either wants collateral, to see that you are partnered with solid investors, or to see that the business is succeeding. The SBA, SBA.gov, offers some direct loans as well as loan guarantees that allow other lenders to receive backing on some or all of the money they lend to businesses. The SBA also licenses private lenders to participate in the Small Business Investment Company (SBIC) program, a form of venture capital. Most aspiring entrepreneurs go to their local banks to borrow money, but they are routinely rejected. If you live in a boom area, it's easier to get a business loan. Cash businesses like restaurants, bars, stores, etc. often won't get a business loan because there is a temptation to hide the cash and default on the loan. In general, the three major ways to get money to start a business are: business loan. Do it all by yourself. Get an investor or partner. If you expect to get either a loan or an investor, at the very least, you have to write a business plan. Even with a finely honed business plan, chances are that by itself, you will get nothing. You have to start the company yourself, even if on a shoestring, do some business, operate for a while before outside investors or banks start to look at you as a worthy risk. The best you can do is run your small business as good as you can and network around to build professional relationships. The truth is that most people who start home businesses finance it themselves. They either have savings, a pension, won some money, a relative gives/lends them some, have a business partner, work another job, their spouse works a job that pays the bills, or run another business that finances this one. If you've got some kind of reputation, like a boat builder for example, you can take advance orders and ask your suppliers for a year credit with interest until you sell a few boats. The bottom line is, don't expect a business loan or venture capital for a new business. If you've been operating a business for a year or two that's starting to look good, the venture/vulture capitalists will start checking you out as a possible way to make money. Remember, for them, it's all about them. They want to make money by riding on your back. Venture capitalists can give you money, but read the fine print of your contract. They ain't called vulture capitalists for nothing. Money to start a business too. People who start full-time businesses are often looking for financing, in which case you have to have a good credit record, a subject I don't probe in this book but cover extensively in my money book. Supplier financing: the supplier or manufacturer gives you product on credit. Your own money. Loan and gifts from family and friends. Commercial bank loans. Government small business loans. Credit union loans. Trade credit from suppliers for product for up to 90 days. Venture capitalist investors. Your own personal savings account. Sell something like you own. Cash in your life insurance for its cash value. Sell investments like stocks, bonds, or liquidate your retirement account. Use your credit cards for cash. If you can't get a business loan, get a personal loan or home equity loan. If you have to lie and say it's for a car or something, do it. In order to build a good credit rating, borrow money and pay back early. If necessary, get someone to co-sign a loan for you, and then pay it back early. Get a collateral loan against something you own. Ask friends and relatives for a loan. Try for a business loan every year. Lease equipment and facilities rather than buying them. Be frugal when spending money. Customer financing: customers pay for big-ticket items in advance or give you an upfront deposit. Franchise your business to make money. Make internet sales. Customers pay, use that money to create the product. License the right to manufacture or market products you own in exchange for a royalty or a fee. Do a job or other business to make money for your business. Kiting is to take the money for an order then use it to buy product from the supplier. If you get a big order from a reputable company, a bank might give you a business loan. Try venture capital companies. Try government organizations like SBA.gov. Small business investment companies/SBIs are groups of people who all contribute investment money to invest in companies. Take your company public. Offer stocks. There are legal programs in many countries where you can do this even for very small companies. Government assistance and grant programs from all levels of government. Taking on partners. Share offerings, going public, selling stocks in the company. Loans from insurance companies. Loans from finance companies. In a major study some big-time professor did at an Ivy League college somewhere, he found that over 80% of all companies are started with under $10,000 and the founders did not get a bank loan to start it. They used their own methods like personal savings, credit cards, and second mortgage/home equity loans. The important thing is to get started as a business regardless of how small it is. Once you're doing business, opportunities will often turn up that you wouldn't have seen if you were on the sidelines contemplating your great ideas. Even if you don't make much profit at first, you're building credibility in the eyes of suppliers, customers, and employees as well as the ability to do business. The most basic ways to get startup capital are as follows. Save some money. Live beneath your means. Sell off some investments like stocks and bonds. Sell off stuff on eBay.com. Sell your car and your house. Buy a cheaper house. Home equity loan. The interest is tax deductible. Loan against cash value of your life insurance. Loan from family member or a good friend. Small business administration loan, especially if you are a woman, a veteran, or belong to a minority group. Small business loan from your state's Department of Business Development. Bank loan, secured by personal collateral. Grants from foundations, government, corporations, churches, etc. if your business is focused on community and social issues. Investors, for a corporation where the investors will most likely become active players in the company or a limited partnership where the investor will be a silent partner, give you money, do nothing in the business but sit back and wait to collect profits. Spin-off. Convince a company to take you in as a subsidiary. Convince an existing company in a similar field to fund you and own part of you. Collect money owed to you by existing customers. Keep expenses down. Work harder to sell more products to make more money for the company. Do good work so you get more customers. Operate as cheaply as you can. Borrow against your life insurance policy. Buy your machines through the manufacturer who should be willing to finance them. Buy a business from an owner with private financing. Buy a franchise which offers financing terms. Check all levels of government out for assistance. Enter business contests. Type business contests into search engines. Have two professions or businesses. One pays the bills for now while you are developing the other. Barter with other businesses for products or services. If you have a big building, rent a part of the space out. Try to partner up with a bigger company. Sell franchises of your business. License your technology, idea, or images to others. Go into joint ventures, limited partnerships or strategic alliances with others. Do a direct stock offering which is smaller than an initial public offering through the SEC, sec.gov. Many people seem to be unaware that most of today's largest corporations started on a shoestring on borrowed money. Look to your family and friends for financial help. Approach them in a business-like manner, tell them about your idea or plans and ask them for a loan. Agree to sign a formal statement to pay them back in 3, 5, or 10 years, with interest. Don't expect some bank or government agency to magically give you all the money you want. Have enough upfront capital and cash on hand such that you can run the business properly and meet customer demand. I'm not trying to dissuade you from getting a business loan, merely saying that a lot of people start off with their money simply because they can't get a business loan even if their credit is good, but getting a business loan can be good because it can help grow a business that could easily be successful if given a chance. Money to start a business. 3. In order to understand banks, you have to see it from their point of view. They are in business to make money. Banks earn money by charging interest to borrowers for the use of money. In general, all banks have quite stringent criteria for approving business loan applications. The loan officers are arrogant and don't want to mess up by giving loans to people who will later default. They are looking for your credit history, your character, your contribution to the business, your ability to repay the loan, collateral for the loan, your track record in business. New, unproven businesses rarely get the nod. If your business has been operating for more than 2 years and earning a profit, there's a good chance that you, as an existing business, will get a loan as opposed to a brand new business. In general, if you present your case to one guy, a loan officer, you have a better chance of getting a loan than if you present your idea to loan committee, because they love to pick things apart looking for fault, and they almost always do. There are a variety of types of loans which I cover more extensively in my money book. However, most loans are either short-term or long-term depending on the need, and either a lump sum or line of credit, which means a certain amount of potential money is granted to you which you can withdraw when and as required, kind of like a credit card limit. Short-term loans are mostly used to help out in the daily cash cycle of a business. Long-term loans are used to buy machinery, the building, land, etc. for the long-term operation of the business. The 6 C's of commercial lending are the measuring standard by which bank loan officers decide whether to give loans or not. Very briefly, they are: character, how trustworthy do you come off as? Cash flow, will the business owner make enough money to repay the loan month by month? Capital, what has the business owner put into the business on his own to show he is serious? Collateral, what does the owner have, including the business and personal property, home, car, etc., that he can use as collateral in case he can't repay the loan that the bank can take on him? Capacity, who is the legal owner of the business who is legally liable for the business loan? Conditions, a general analysis of the business in terms of the market to determine whether it's feasible and could be profitable. The loan proposal is different from your business plan. When you write it up, tailor it to the dollars and cents of your business and the 6 C's of business credit rather than all the visionary stuff in the business plan. Prove that your business meets the standard of each category. When you do your projected cash flow statement, don't bullshit too much. Keep it real, because these loan officers can usually tell when you're being too optimistic. Don't just apply to every bank around. Do some research. Some banks specialize in certain sectors of the economy. The particular loan officers at a bank mean a lot as to whether you will get your loan or not. In general, large banks are callous to small business owners but will process the loan quickly if you qualify. Small banks are more considerate of the small start-ups and young companies. If you're accepted for the loan, the bank will give you a commitment letter, which is the loan proposal. Read it carefully. Question any term or condition that you don't understand or contest. Have a lawyer check it out before you sign. Once you get the loan, you have to work to keep it. The bank has given you a bunch of rules, and if you don't follow them, they can call back the loan anytime and possibly force you to liquidate your business. Keep the lines of communication open. Give them your monthly statements and whatever else they ask for. If you pay steadily for a year or two, you could possibly ask to negotiate for better terms. If a bank refuses you, ask them why, then use this information to improve your loan proposal for the next bank. Try the same bank again after 6 months or so if you want. Assertive behavior can help you get a loan as long as you don't come off too arrogant. Beware of so-called finance professionals or loan brokers who claim they can get you a business loan for a fee. More often than not, they will take your upfront fee and not deliver anything. These loan brokers often advertise in business newspapers and magazines. If you plan to use a loan broker, get a referral from someone trusted like an attorney or CPA. Never sign a loan broker's contract without getting a lawyer to look it over first. Some CPAs and lawyers provide loan broker services. There are non-bank lenders around like savings and loans, commercial finance companies and credit unions who offer business loans if they think they can make money off you. Find them in the yellow pages or on the internet. Try number 658.152-9 or HG4026 at the library for books about business financing. Money to start a business for. Just about anyone with a good credit record and knowledge can get the capital he or she needs to start a business. The secret is in knowing how to put together a proper proposal and to present it to the right person. The first thing you're going to need is a complete business plan. Your business plan must be detailed, complete with projected income and expense figures through at least the first 3 years of operation. Now, for the capitalization proposal. First, keep in mind that whenever you ask somebody for money, whether it's for a small personal loan or a large amount of money to finance a business, you're involved in a selling situation. You have to sell yourself in a sales presentation. Within this sales presentation, you must have all the facts and figures. You must anticipate the questions and the possible objections of the prospective lender with answers or explanations, and you must package it as impressively as you can. You can hire a CPA to help you put it together properly once you've got the facts and have a business plan he can work from. The more money you request for your business, the more your lenders or prospective investors are going to want to know about you, your planning and your business. They want to be impressed with the fact that you've done your homework, they want to see that you've researched everything and documented your facts and figures, they want to be assured by your presentation that investing in your business will make money for them. Unless you can instill confidence in them with your business plan and loan or investment proposal, they're just not going to give much positive thought to your request for capitalization. You will need a balance sheet describing your net worth, the worth of what you own compared to the amount of money you owe. You will also have to prove your stability and money management talents relative to how successful you've been in paying off past obligations. If you've had credit problems in the past, get them cleaned up or at least explained on your file at your local credit bureau office. Under the law, credit bureaus are required to give you all the information they have about you in their files, and it's your right to correct any errors or enter explanations regarding negative reports on your credit. Prospective lenders or investors will definitely check your credit history. In every instance where you run into reluctance on the part of a lender to lend you the money you need, explore the feasibilities of CO-signed loans. You can have a business associate, friend or even a franchisor sign with you. Oftentimes you can offer collateral such as stocks, bonds, time certificates, business equipment, or real estate, and in this way give greater confidence to the lender in your abilities to repay the loan. Whenever you can show a contract from someone who has agreed to purchase a certain number of your products or services over a specified period of time, you have another important piece of paper that most lenders will accept as collateral. Still, another possibility might be to get a bank or a firm that has loaned you money in the past to guarantee your loan. They simply guarantee that they will lend you money in the future if ever the need should arise. Money to start a business 5. Going straight to your neighborhood bank, applying for a business loan and walking out with the money is just about the most unlikely of all your possibilities. Banks want to lend money and must lend money in order to stay in business, but most banks are notoriously conservative and extremely reluctant to lend you money unless you have a regular income that guarantees repayment. If and when you approach a bank for a business loan, you will need all your papers in order, your financial statement, your business plan, credit history, and all the endorsements you can get relative to your succeeding with your planned enterprise. In addition, it would be a good idea to take along your accountant just to assure the banker that your plan is verifiable. In the end, you will find that it all boils down to whether or not the bank officer studying your application is sold on you as a good credit risk. Thus you must impress the banker not only with your proposal but with your appearance and personality as well. In dealing with bankers, never show an attitude of doubt or apology. Always be positive and sure of yourself, however. Don't come on so strong to them that you're either demanding or overbearing. Just look good, know your stuff and project an attitude of determination to succeed. Your best bet in attempting to get a business loan from a bank is to deal with commercial banks. These are the banks that specialize in investment loans for businesses, real estate construction and even venture programs. Look in the yellow pages of your telephone or business directories. Call and ask for an appointment with the manager and then explore with him the possibilities of a loan for your project. One of the nice things about commercial banks is that even though they may not be able to approve a loan for your business ideas, they will almost always give you a list of names of business people who might be interested in looking over your proposal for investment purposes. A lot of commercial banks stage investment lectures and seminars for the general public. If you find one that does, attend. You will meet a lot of local business people, some of whom may be able to and interested in helping you with your business plans. When you're looking for money to move on a business deal, it does not really matter where the money comes from or how it all comes about. It's important that you get the money and at terms that are suitable to you. Don't overlook the possibilities of an advertisement for a lender or investor in your local papers. Place your ad as well in national publications reaching people looking for investments. Other avenues to seriously consider are foundations that offer grants, local dental and medical investment groups, legal investment groups, business associations, trust companies, and other groups or organizations looking for tax shelters. Basically, it isn't a good idea to go to a finance company or other commercial lender of this type for a business loan. The most obvious reason is the high interest rates you have to pay. These companies borrow money from larger money lenders and then turn around and lend it to you at a higher interest rate than they pay. Herein lies the means by which they make money from granting loans to you. The more it costs them to provide the money for you, the more it's going to cost you to borrow their money. The only element in your favor when borrowing from one of these agencies is that most will generally lend you money against collateral other lenders just won't accept. Insurance companies, pension funds, and commercial paper houses are not too high with their interest rates, but they generally will not even consider talking to you unless you're requesting $500,000 or more. They will also pretty much require that your business proposal be backed by the best possible plan. Many states have business development commissions whose goal is to assist in the establishment and growth of new businesses. Not only do they offer favorable taxes and business expertise, most also offer money or facilities to help a new business get started. Your Chamber of Commerce is the place to check for further information on this idea, chamberofcommerce.com. Industrial banks are usually much more amenable to making business loans than regular banks, so be sure to check out these institutions in your area. Insurance companies are prime sources of long-term business capital, but each company varies its policies regarding the type of business it will consider. Check your local agent for the name and address of the person to contact. Try the SBA, sba.gov, in the possibility of getting a loan. Also, be sure to check at your public library for available foundation grants. These can be the final answer to all your money needs if your business is perceived to be related to the objectives and activities of the foundation. Money to start a business. 6. Most banks won't give a business a loan unless it's been operating successfully for several years and wants to expand, but you can always try. Get your credit rating fixed up and write up a good-looking but simple business plan. Having too much startup capital can backfire, making the entrepreneur careless and experimental, whereas somebody financing it with their own limited supply of money is much more cautious and thoughtful before they spend their money. Startup entrepreneurs are better off without other people's money because they can learn how to run the business on a shoestring, which will make them more efficient in the long run. You can pitch the business concept to friends or family members who might lend you the money. If that doesn't work, try to get a cosigner for a bank loan. If you get a loan from a friend or family member, agree on the terms and write up a contract, preferably with the help of a lawyer. Discuss what would happen if the business fails. The government, at all levels, be it federal, state, or local, can possibly help the small business owner get funding, but you have to look for their programs. Contact the SBA at 1-800-UASK-SBA and go to sba.gov to learn about the situation. Contact local chambers of commerce and city/county economic development offices to ask about programs for small businesses. A common method of obtaining business financing is through second mortgage loans on a home or existing piece of property. Say you purchased a home 10 years ago for $35,000 and today the assessed valuation is $85,000, with a mortgage of $25,000 still outstanding. A lender may consider your home to be security or collateral for a loan up to $60,000. In many instances, this is the easiest and surest way of getting the money needed for franchise or other business investment. Deciding to obtain a second mortgage on your home in order to finance a business opportunity is without doubt a major decision, but if you are sure about your investment project and are determined to succeed, you owe it to yourself to go ahead. You could incorporate yourself, borrow money from your family through a second mortgage on your home and protect against the loss of your home through the Federal Homestead Act. You can't borrow money from retirement savings plans like the IRA or the 401k. You can only borrow from a 401k for loans to cover hardship, which does not include starting a business. There's the money broker or finder. These are the people who take your prospectus and circulate it with various known lenders or investors. They always require an upfront or retainer fee, and there's no way they can guarantee to get you the loan or the money you want. There are many very good money brokers and there are some that are not so good. They all take a percentage of the gross amount that's finally procured for your needs. The important thing is to check them out fully, find out about the successful loans or investment plans they've arranged and what kind of investor contacts they have before you put up any front money or pay any retainer fees. The different ways of financing a business are as many and varied as your own creativity. The sources of obtaining money are virtually limitless and available to anyone with an idea. Give some thought to the possibilities of getting the people supplying your production equipment to co-sign the loan you need for startup capital. This is truly the age of creative financing. Check your local phone book under State Government Commerce or Economic Development for information about state loan programs for business. Forecasting and obtaining capital. There are two ways to get money to fund a business. Borrow it. Get it given to you by investors. Borrowing money comes from trade credit, loans made by financial institutions, leasing companies, and customers who have made prepayments on larger orders. Investment money is money received by the company in exchange for some portion of ownership. Sources include the entrepreneur's own money, money from family, friends, other non-professional investors, or money from venture capitalists, small business investment companies, SBICs, and minority enterprise small business investment companies, MESBICs, both funded by the SBA. A business loan, depending upon its sources, e.g., trade, bank, leasing company, mortgage company, comes into the business for short or intermediate periods. Investment money remains in the company for the life of the business, unless replaced by other equity, and is repaid only when and if there is a surplus at liquidation of the business after all creditors are repaid. Acquiring such funds depends entirely on the business's ability to repay with interest, debt, or appreciation, equity. Financial performance, reflected in the financial statements, and realistic, thorough management planning and control are the determining factors in whether or not a business can attract the funding it needs to operate and expand. Business capital can be further classified as money to start the business, day-to-day expenses and future expansion. Money to start the business is the cornerstone of the financial structure of any company. It represents the total value of the business, all other financing being debt that must be repaid. Usually, you cannot get equity capital, at least not during the early stages of business growth. Day-to-day expenses money is required to meet the continuing operational needs of the business, such as carrying accounts receivable, purchasing inventory and meeting the payroll. In most businesses, these needs vary during the year, depending on activities, inventory build-up, seasonal hiring or layoffs, etc., during the business cycle. Money to expand is not directly related to cyclical aspects of the business. Growth capital is required when the business is expanding or being altered in some significant and costly way that is expected to result in higher and increased cash flow. Lenders of growth capital frequently depend on anticipated increased profit for repayment over an extended period of time, rather than expecting to be repaid from seasonal increases in liquidity, as is the case of working capital lenders. If you are asking for a working capital loan, you will be expected to show how the loan can be repaid through cash, liquidity, during the business's next full operating cycle, generally a 1-year cycle. If you seek growth capital, you will be expected to show how the capital will be used to increase your business enough to be able to repay the loan within several years, usually not more than 7. If you seek equity capital, it must be raised from investors who will take the risk for dividend returns or capital gains, or a specific share of the business. Talk to the bank and investors about it. Other ways to get money for your business. If you do not have the money to start your business but feel certain it will be a success, try and raise money yourself to get the business off the ground. The easiest way to obtain money fast is to talk to your friends and relatives about it. Getting them to invest in your idea will be an easier sale, perhaps, than talking to complete strangers about it. The downside is that if the business fails for any reason, that relationship may never be the same. If family and friends are not potential investors, you must look outside this familiar circle to other candidates. You could try to put up the cash yourself and be a 100% owner. Review your personal asset and liability situation to see if enough money can be raised to initially fund your startup costs. Insurance, cash value, savings, sale of goods you could do without, credit card advances, even a second mortgage are all ways to personally raise money for your business venture. You must decide if this is the right way to go. Do you believe your business can be a success financially? If so, there is money out there for you to find so you can turn your dream into a reality. Look for ways to save money, like cut back on entertainment expenses, transportation costs, eating at restaurants, insurance, etc. Remortgage your home. Sell personal assets to the business and take a tax deduction. Get equipment loans from the manufacturer. Get installment financing so you pay more of the loan back towards the end of its term. Lease equipment and real estate rather than buy. Sell your assets and lease them back through a commercial leasing company. Use credit cards to conserve cash. Use a personal line of credit loan. Rent out part of your home or garage. Sell stocks and bonds. Cash in pension plans. Sell personal possessions like a boat, second car, motorbike, big screen TV, etc. Solicit friends to invest in you. Make a list of friends you can approach and perhaps induce to put up some money as silent partners. Make a list of people you might be able to sell to as stockholders in your company. Make a list of relatives and friends that might help you with a loan to furnish money for the development of your business. Look for venture capital organizations. Visit banks, insurance companies, anyone who offers loans and development capital. Gets loans from family and friends. Offer part of the business as collateral. Employ your wife and kids without pay for a while. Have a cash-only policy in order to get immediate cash when you're starting out. Ask for deposits on orders to be delivered in the future. Provide discounts for prompt payments. Get your major supplier to give you some credit when you're starting out. Buy goods on consignment, meaning the distributor gives you the stuff, then comes back next week and charges you X price for every widget that's gone from the original inventory. Loan secured by using your business equipment or inventory as collateral. Debentures. Sell the store, factory, or warehouse and lease it back, a sale-leaseback. Loan against life insurance policy. Merger. If you've got a unique product, try to license it or get distributors to sell it for you. Franchise your business. Barter with other businesses for goods and services. Raise cash fast. Some alternatives to a bank loan or VC are trade credit. Your suppliers give you credit. Lease equipment instead of buying or collecting the money that's owed to you. Approach the people who owe you money. Offer 25% off the value if they pay you immediately. Do what all the old-timers did. They started their businesses on a shoestring and only expanded when they made enough money to buy whatever it was they needed. Cash advance on credit cards. The cash advance privilege that credit cards extend is the best way to raise the cash you need immediately and with no questions asked. If you have reasonably good credit, your credit limit on each of your credit cards should be $500 to $1,000 at least, with American Express often giving a $2,500 limit, and if you have 10 cards with this cash advance privilege each with a $1,000 credit limit, you can simply go to the banks involved and draw out your $10,000. If you don't have them, you may not realize that it's possible to have 10 credit cards that offer cash advances. Different banks sponsor different cards and they all want you to use their card. For example, you can have a Visa from Chase Manhattan and another, separate Visa from Bankers Trust, plus a Master Charge card from Citibank and a second Master Charge card from Chemical Bank. The possibilities are numerous and you should take advantage of them, for this is certainly the easiest way of raising cash quickly. If you don't hold these cards now, then you should begin to establish the credit that will enable you to get them in the near future, so you will have the reserves available when you too need to raise cash quickly. T&E cards. Aside from the no-fee cards like Master Charge and Visa, there are also the travel and entertainment cards like American Express, Carte Blanche, and Diners Club. These cards charge a yearly fee for holding them and are more difficult to get. Your annual income and your credit standing must be higher, but the amount of cash advances they allow you to draw on are higher, running as high as $2,000 or $2,500 each. American Express even offers a Golden American Express card, which many businessmen use, which allows them about $5,000 of instant cash immediately. Automatic overdraft protection. Most bank accounts today, and yours is very likely to be among them, come with automatic overdraft arrangements whereby you can write checks for more than the balance you have in the bank, and the bank will honor them, merely automatically adding loan money to your account and charging you the interest due for that loan. In effect, this is an immediate and automatic loan to you, without any current credit check, which is especially handy if, at the moment you need the money, you happen to be unemployed and planning to start a new business, which banks sometimes look upon with disfavor and refuse to loan upon until you're big and successful. So go ahead and write a check for the full amount that you're allowed to draw upon, which is seldom less than $1,000 and which, in some banks, goes to $5,000 or more. Family and friends. If you're stuck for sources for capital, or at least for sufficient capital for the business you have in mind, give some careful thought to whom you could ask to help you. Almost all of us have a favorite relative or two, and, if we're lucky, at least one of those may have money. Of course it's nice if he or she has loads of it. We all like to have a rich uncle, but even if the amount is not enormous, perhaps you will succeed in persuading one or more of your relatives that they should help you from whatever they've got put by for a rainy day. Mother, father, uncles, aunts, brothers, sisters, even cousins. Try them all. Where there's any chance at all, they might have some bread stashed away and might spring some loose for you. If your relatives are friendly to the idea but they want to hold on to their funds, don't overlook another neat idea. One of them can co-sign with you on a bank loan, and this almost always ensures that your bank will go along with a loan that they might otherwise have refused, or give you a loan for a much larger amount than they would have granted you yourself on just your own personal credit. It's really no skin off their back just so long as you keep up the payments on the loan. Co-signers are not restricted to relatives. You can have your best buddy or your girlfriend or a fellow employee co-sign for you. Insurance policies. Depending on the type of life insurance policy you now hold, and especially if you've had it for a number of years, you may be eligible to borrow against its cash value. In most cases, this money is available to you at a very low rate of interest, and also, generally, you can keep the money out, providing you pay the interest, without having to repay the principal at any set time. Refinance mortgage/home equity loan. If you're buying the home you're living in and have a conventional home mortgage, you may not realize that if you've been paying down the mortgage month by month for a number of years, you have a considerable equity built up. In addition, your house may now be worth more than you originally paid for it. Therefore, either your present bank or another may be willing to refinance your mortgage, which will provide you with a chunk of available cash with which you can capitalize your new business. One advantage of this scheme is that you will most likely not increase your monthly payment by very much, perhaps it will not increase at all, although payments may extend for additional years at the distant end. And thus you will not have a heavy loan repayment schedule added to your obligations early on in the beginning of your business. Besides the possibility of refinancing the original mortgage on your house, there is another way of using the equity you may have in your house. You can get a second mortgage, either from a bank or from professional lenders. One reason why you might go the second mortgage route would be if your first mortgage was written at a very favorable rate of interest which you would not be able to match on your refinanced mortgage, and consequently you would not want to refinance the larger principal amount. Sell your stuff. Have you considered, while you're looking around for sources of cash, what you have right in your own home? Some of those heirlooms, paintings, or other antiques which you or your wife may not care for and which you may have stashed in the spare room or the attic, may be worth a lot of money, far more than you have ever imagined. Get them appraised, show them to a knowledgeable dealer or a friend who's an antiques buff, and find out if you're sitting on a gold mine that you never even knew existed. Collect old debts. Do you have some friends to whom you have loaned money in the past and who have not yet paid you back? Or are you owed money for services rendered of one sort or another? Or does an ex-employer still owe you sick pay or vacation pay that he has not paid you? Don't let these things lie any longer unpaid, you need that money now. Put on the heat, make some urgent phone calls, write a few letters. For most collections, the small claims court can be a great help. For collecting from your employer, your best bet is the U.S. Department of Labor, Wage and Hour Division, which will almost certainly have an office in your city, dol.gov. If your claim has merit, they will make sure that you receive what's due you. Compensating account. You can get a loan from a bank by depositing a compensating balance into an account. In most cases, a compensating balance amounts to about 20% of the loan it is insuring. You may be able to borrow up to 5 times the amount you deposit into the account. Your ability to use this process depends on how good your credit rating is. If you have a poor credit rating, you may have to deposit a higher percentage of the loan. Instant credit card loan. MasterCard and Visa have a service that allows you to get a free loan with their special check writing service. The check you write is simply billed against your credit card and has the effect of an instant loan. You may have seen this type of check with your regular statements. The way to make this loan pay off is to find a bank that accepts this type of special check with a 30-day grace period. To get an indefinite loan, write the first special check and do whatever you want with the money. Then write a second special check and deposit the money into your checking account. Use this money to pay back the credit card company. In this way, you may keep the money indefinitely. Raising money using department store cards. You can use your department store cards to raise quick cash. Simply go to the stores that have issued you cards and charge merchandise. A few days later, return the merchandise for merchandise credit slips instead of having your account credited. These slips may be used for future purchases and they are as good as cash in those particular stores. Then cancel these credit slips to your friends and neighbors for a 10% discount. Since this money is to be used for an investment, make sure the investment will pay higher than 10%. If you begin this plan right after your monthly billing notice, you will have the use of the money for 60 days and pay no interest to the department store. Save on credit card interest charges. In most states, banks are allowed to charge you only 1.5% on unpaid balances of your credit card accounts. This comes out to 18% per year, which is a high interest rate. Because these states consider them loans, the banks can only charge you 1% interest per month. That's 12% per year. How can you use this to your advantage? Make purchases with your credit cards and pay off these same purchases with a cash advance. With this method, you pay for the purchases about 30 days after you make them and at a rate of only 1% per month. You will cut your credit expenses by 1/3 using this method. Continuity sales. One of the most exceptional ways of controlling and improving cash flow well into the future is by employing something called continuity of sales or services. Continuity sales are simply a contract to purchase products or services on an installment basis for a fixed period of time. The best example of a continuity sale is a magazine subscription, 12, 24 or 36 issues delivered each month for X amount of dollars. The bigger the subscription, the better deal you get. The publisher gets more money up front and the customer gets a better deal in the long run. Continuity can apply to anything. Let's say you own a dry cleaning business. How about an annual deal to clean 5 shirts or blouses per week for a set amount of money? Get people to pay you for the entire month up front for a lot of fast cash flow. You will trade a discount for getting business, but you will ensure a steady cash flow for months to come. Continuity works with just about any kind of product or service you are offering, from dry cleaning to your personal consulting service. You can structure payments for continuity sales on almost any basis, but it's best by far to go for complete payment up front. After all, the discount is based on a customer's commitment and they will be a lot more committed with their money on the line. Corporate method. You can get money you need by forming a corporation. Besides being easy to form, there are many advantages. For instances, you can be authorized to sell 1 million shares of stock at no par value when creating the charter for the corporation. Issue 1 million shares of stock once you are authorized to do so. Keep 300,000 shares for yourself and reserve another 300,000 for future sales to the public. The remaining 400,000 shares should be issued for public sale at about $1 per share. If you sell 100,000 shares, you will have raised $90,000 after deducting a 10% broker's fee. In time, your stock may go up to $5 per share. Your stock that was worth $300,000 will then be worth $1.5 million. And this doesn't include the stock that you reserved for future sale. Seconds registration is not necessary below a certain monetary amount that you want to raise, which is currently around $1.5 million. Check your corporate state office and the seconds at sec.gov for more details about raising money by subdividing your small business down into shares.